Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is a stock market wrap-up for weekend edition. We're going to take a look at the market action of yesterday and look at some weekly charts, look at our indicators, key ETFs, and then I'm going to review trade ideas for the last week, ones we exited, a couple we're still in, and then others that are working. So, there are several here: Facebook, Apple, Twitter, NXP Semiconductors, Celgene, and others. All right, so let's start off here looking at the Dow Industrials. The Dow was down 279 points, and at one point was well over 300, like 350 points down or whatever. So it got whacked pretty hard, and it was negative from the get-go yesterday. And part of that was the fact that after the market closed in China, the Chinese regulators, I think, implemented some increased regulation on the trading. I can't remember exactly what they did. They may have increased margin and that type of thing, trying to cool off their market over there a little bit. A little concerned that it's gotten a little hot. And of course, I showed that chart on Thursday evening of the Shanghai Composite, and it has been going up, and it was up again on Friday, but I'm sure it's going to be down on Monday after that action. So this breakdown, let's look here at the Dow. I've adjusted this trend line of this wedge to put it in line with the S&P 500 wedge in terms of the points. So I think there's a good case to be made that it could have broken out of the wedge and we just pulled back up and been hugging it. Okay. The other possibility is that where I had the trend line before, that we draw it across the bottom here and that it hasn't broken down. But this kind of looks a little bit more like what I think might be going on, especially when you look at the S&P 500. And in this one, you had 3 points here on this trend line, which I liked. And then you could see how it was just waffling along, and then it just broke down. Now, the real question is, are we going to get more follow through or not? And this, and I've been talking about this now for days and weeks, this key point here and this point here has not been taken out. So we're literally in this no man's land, as I call it, and I had a post where I called that, no man's land, because we're just kind of in this range in here and in just chopping sideways until we break down out of that. I don't think we're going to definitively, have a direction to the market. So we'll see whether or not that's going to start to happen here pretty soon. The Nasdaq, same type of scenario in terms of where we're at, broke down pretty hard, had a nice gap in there on yesterday, on Friday. And if you look at this trend line, this is broken out of it a little bit. Extend that right. If I extend this right, you can kind of see. And again, this has got a wedge look to it too, and a kind of an ending diagonal type thing, which is typical of a fifth wave. This one, remember I talked about on Thursday night, and I said, well, it looks like we're getting some different little topping couple bar scenarios here. Well, then it breaks down. So again, the proof is going to be in the next couple of days to see what kind of follow through we get, whether or not this is rolling over or whether this was just a one-day pullback on options expiration day. Russell 2000. Pretty sharp again, kind of gap just like the Nasdaq did, and breaking down out of this trend line. I mean, that's a little bit of a negative there. And again, I had circled this one here when I was looking at it. All right, let's take a look at the weekly charts. The weekly here. So let me zoom in a little bit more. The wedge isn't quite as distinct as it is on the daily chart. We do have a close below the 10-week moving average. We don't have a cross on the moving averages yet, but you can, again, the consolidation that's going on is pretty clear in terms of sideways consolidation. Same thing here on the S&P 500. And by the way, on all of these, we're getting a little bit of divergence that's showing up, some more dramatic than others with the weekly charts. And the Nasdaq weekly, a little bit more, again, a little bit more of a wedge-looking formation here in the Nasdaq weekly. And you can see the divergence that I'm talking about here, where the indicators are not moving to new highs as the price action is. and especially see, DI plus, not confirming this move up at all. And let's take the next one we'll take a look at is New York Composite. Okay, here's the New York Composite weekly average, and again, it's staying above the 10-week moving average for the last 3 weeks, but it is now starting to show this type of divergence formation in here, and not being confirmed by moves up on the at least on the RSI. And the last one we'll take a look at is the Russell 2000 weekly. Okay, here's the Russell 2000. Almost had an outside down day in terms of the candle here, but it really didn't, because it didn't go to a lower low in terms of the week on the week, but kind of a reversal type looking bar in here. This was more of an outside down bar in here. And let's take a look at the, see, it's not being confirmed by DI plus, although we're not getting that same story on the RSI. And again, it continues to just come up here and hug that long-term trend line. All right, let's take a look at our indicators, short-term trading index. Okay, so the 10-day on the short-term trading index is at 1.016, so it's pulling back up a little bit. So again, it's staying right in the middle, but look at this range on this thing. Again, because of the huge selling, it got so negative, and then it came back and closed 1.13, but at one point it was over 3.9, and you can see we don't get, on an intraday basis, it doesn't get up there that much that often. The VIX, I think that was right in here somewhere. No, here it is, the VIX. Okay, so the VIX popped up naturally on this doji, and ended up being a doji bar, closing right about where it opened. But it's back above the 10, and making a little bit of a move, but hard to tell. Again, we're going to need follow through in here to confirm that something's happening. Or you could even look at, making a trend line and saying, well, is it breaking any kind of, it might be. You might make the case, but actually kind of came right up to it and then pulled off of it. So, all right, the next one is the high-low. Okay, so I had been talking about how the blue line was breaking below the blue-gray, so the 10 breaking below the 21, and how it had happened several times. Remember that video I did here a few videos ago? And so now we're getting this cross a little more distinct, and of course it's pulled down. What is this, 16, I believe? Yes, so only 16 more new highs than new lows. So it's kind of interesting from a bullish standpoint. You could say, but the bulls would say, well, look at how negative the day was, but we still had 16 more new highs than new lows. All right, let's take a look at the McClellan Oscillator. Okay, so here's the McClellan Oscillator, and it pulled down, but I think the bulls would say, wow, it didn't get real negative, and the bears, one thing I'd look at and say, well, all that selling, we've still got a long way to go before we get oversold. So we could have a heck of a lot more selling before we get oversold. So the bottom line is we're still right smack in the neutral zone, even after almost 300-point down day on the Dow. The put-to-call, 10-day put-to-call ratio on equity put-to-calls is 0.61, so we're not at an extreme yet on that either. The advanced decline yesterday was 4-to-1 to the downside, 4 stocks down for every 1 up. At one point during the day, it was over 6. So fairly strong, breadth move to the downside. Let's take a look at the high yield bond ETFs. And we're going to look at these sequence of ETFs here, market ETFs I call them. Okay, so on this high yield bond fund, I've got this trend line going up here. This almost looks like a head and shoulders consolidation type thing. We'll see whether we get a move down. It is starting there. It closed below the 10-day exponential moving average. So again, when the market's moving down, it's risk off, and that's exactly what this is showing. We'll take a look at the 10-year, the TLT, the long-term Treasury bonds. 20 plus years. So the move here, rally, so interest rates dropping, and of course there's been a lot of discussion and people posting and articles and things about how the long-term bonds in the Europe, German Bund, and everything is getting really, really low. I mean, just unbelievable. Almost about to go negative. And I'll be honest with you, I'm not sure I totally understand the concept of negative interest rates. So I need to do a little homework on that. All right. So this on TLT, this looks like it could be breaking out of consolidation here. And with this kind of move, but we don't have a close really back above that line, but it looks like it's attempting to break out, or attempting to break out is what I'm trying to say. The dollar index, this again pulled down and then rallied back, and so I'm kind of wondering now. Here's the scenario I'm going to put on the chart, and think that we've got a fourth pullback and that we're working a 1-2 higher. So we'll see now, because of the moving average cross, we'll see whether or not we get continuation up like this with the dollar moving higher. And of course, if the dollar does move higher, then that would mean oil would pull back, and that makes sense. If your oil is getting resistance in here at this point, I could see it pulling back down like this. Now, it's interesting when I looked at this on a weekly basis. Look how this is a pretty sharp counter trend rally, and then look how strong the 21-week moving average is. Okay, so whenever you go against a really strong moving average like that, let me move this out of the way. I hear you hit it, you kind of hit this resistance, then you get some chop or some pullback, and then you maybe can move back, continue the trend. So it wouldn't be unusual to see it pull back or chop sideways for a while as it's putting in a little bit of a bottom maybe. And so that would make the case, in my mind, for why you might get some pullback here and would justify the dollar, in terms of how they're all working together. The dollar might be moving higher. So we just looked at oil. Let's look at gold, and then we'll be done with those ETFs. And gold's not showing us a whole lot more. It's just trending. It's just pushing sideways here. All right, now we'll take a look at the sector ETF. Start off with semiconductors. Okay, SMH. So this pulled down on Friday, of course, with the market, but not super dramatic in here, but it could be rolling over. I mean, you could make the case if you put a little trend line in here that maybe it broke a little short-term move, but we'll see. Again, I talked about having this trend line up here from a bullish scenario, but it's either got to go a little higher and take out this point, or it's going to roll right over. Right now it's acting like it wants to roll over. Take a look at the home builders. Yeah, if I can find it, there we go. And the home builders look like they're rolling over. We're getting a little moving average cross here, the 10 crossing below the 21. Pretty sharp last 2-day move for the consolidation that was going on, and it was trying to move higher. Now it looks like it's starting to go the other way, and you could make the case that this is breaking some trend lines in here, okay, and that it's starting to break down. The next one is the financials, select sector financial XLF. Again, that broke down here. I had this trend line for a potential bullish scenario, but now we broke down on Friday. And again, is this just a one-day move, or just like in the market, is this a one-day move, or are we starting to trend down? And we're only going to know when we get some more follow through the next couple of days. And the biotechnology, here we go, Nasdaq biotechnology. Okay, it's come back after this big sell-off, kind of a push up. We got a moving average cross up in here. It's holding above the 10-day exponential moving average, so it's acting like it's trying to come back. Not really getting any kind of a good scenario here, other than all the indicators are in positive bullish mode right now. So this looks like it's starting to resume its trend to the upside, and we'll see whether that happens or not. And the last one is the energy select sector, assuming I can find it fairly quickly. Here we go. So this is similar to the USL in terms of the picture that you're getting down here, running into resistance. So the energy stocks are kind of doing that. They're showing a little bit more bullish action, but again, I'm not getting. You got a little bit of a gap opening here, but I'm not getting any kind of strong picture other than what we just talked about on USL. All right, let's go ahead and take a look at our stocks and basically kind of a review of trade ideas. And we'll start off with Facebook. Okay, Facebook. This one we got into on the 6th, which was right in here, I guess. Yeah, right in here. I think when we thought it was breaking out, thought it was going to resume this trend. We had all the moving averages aligned, and then it kind of went into stall out mode. And so it's, after several days and then not getting the continuation here, I tightened the stop and got stopped out on the 15th, which was right in here. Got stopped out right at the low of this bar here, and that worked out pretty well so far. Protected us. It's a very small loss on the trade, and again, just didn't get the continuation. So I'm not sure whether if this is 1-2, 1-2 now still, and we're moving higher, and we'll see. Again, this is all about where do we get the continuation? But right now we're out of it. Apple, same thing happened on Apple. And let's see, Apple. Okay, so yeah, I was bullish on Apple here. We got in here on the 7th early on, and then it reversed down on us. So we were fighting against us in here. Thought we were coming back, and then it started to stall out again. And then that's when I tightened up the stop, and I got stopped out on the 14th actually. So that was right in here. Right in here is where we got stopped out. So on the trade idea. So this kind of protected us so far, and actually right now I've got a new trade idea where we're going to play it to the other side, and we'll talk about that here in a minute. Let me review the other. Let's see, the other one is Twitter. So Twitter, I had puts, and then got stopped out here on Thursday by tightening the stop. We had actually been in it since here on the 9th, and just probably should have been a little bit more patient, because it would have worked out wonderful. At least yesterday it would have been going my way so much more, but it got stopped out again for a very, very small percentage loss on this trade, and was in protect mode after I think it was like 5 days or so, and it wasn't really doing or acting like it wanted to break down. So maybe should have been a little more patient on it, but we'll see. We'll see what happens, because this, again, we'll see how the market reacts Monday, Tuesday. All right, next one is NXP Semiconductors. Okay, NXP on the 13th, the got in here with puts. The trade idea was to head south here, and it kind of broke that trend line a little bit, and we're right now it's kind of went sideways. We got this little bit of a rally day on Thursday, and now it's pulled back down. Although this wasn't a super bearish move with the market being so bearish. We'll see what happens on this. I mean, we've got quite a bit of negative divergence that came in on that move, the peak move. But now we're kind of in the middle on this RSI, and what I'm looking for is just one more leg down, and we'll see if we get it or not. Next one is Celgene. Celgene is a similar type play, similar type thing, and again on the 14th, I thought we were getting the breakdown. Got a little bit of a snapback here on the 15th on Wednesday, and we held in there, and it just rolled back over again Thursday, Friday. And looks like it's breaking down out of this kind of a bear flag. Looks like almost like a bear flag in here with this consolidation. So we'll see. We're looking for one more leg down, and the moving averages, short term and intermediate, are aligned to the downside, and you could easily pull right on back down into here to the 233-day moving average. There's again, so you got support down in this zone all the way down here. Don't know that's going to get down there. I've got an intermediate target that's closer into this range, down near the bottom of the Keltner channels, and we'll see see if we can get a little follow through on Monday. All right, let's take a look at some that we're working now. Okay, United Continental Airlines. I still keep calling them airlines, and this looks like a big head and shoulders top to me. The Head and Shoulders projection comes down here to 54. We're not in this. We're looking for an entry. I've got a target right down in here, and I'm looking for it to hit it. It didn't hit it on Friday, didn't hit it on Thursday, Friday. So we're gonna, I've still got it out there. And by the way, I didn't mention it, all these details of these trade ideas are on the Trade Ideas webpage. You just need to subscribe, first name and email, and you're good to go. And you'll be a subscriber, you follow me, and get access to the Trade Ideas webpage. So we're looking for this. I mean, this looks like consolidation of a down move, and it wouldn't surprise me at all to come right on down here to 233 and maybe hit this 54 and fulfill the measurement of the Head and Shoulders move. All right, and let's go back to Apple real quick. And I just think the way Apple's rolling over now, closing the way it is, I am looking for an entry. This looks like sideways consolidation, kind of like a stretched out symmetrical triangle. And right now, I'm not, it's got to hit a specific point for me to enter. And that's where I'm looking for, to enter with puts and then play a move to the downside. So I am now thinking that these 5 waves, this 5th wave is done, and we are now into corrective action. Of course, there's so many ways that corrective action can morph on a stock. It's just, you just got to be careful a little bit and trying to trade short-term trends in here. But that's the play we're going to have on Apple for Monday, and we'll see if we get an entry or not. And then the last one I want to take a look at is FireEye. FireEye is kind of interesting. It broke down in here, and now I'm kind of thinking that the way this is acting and moving average cross in here, yeah, we got this pullback on Friday, but what I'm watching for is an entry long up here to get into calls, and we'll see if I get it. I've got a specific setup that I'm going to be playing and a specific entry I'll be looking for here, and there's a possibility that this thing is doing a little bit of a Head and Shoulders consolidation type move, okay? And if that's the case, then this is going to go like this. For one, what I'm thinking is possibly still, this hasn't been negated, this scenario of a 1, 2, 3, 4, 5 of 3, so we could be in a third minor wave of a third intermediate wave, and we just don't have it complete yet. So that's what I'm, from an Elliott wave perspective, that's what I'm looking at and thinking might be playing out here. And so I'm looking for a re-entry to get back in here and go long. All right, so we'll see if we get that on FireEye on Monday or Tuesday. So, all right, this has been Joe for Beyond the Chart. That's it for the weekend. Everyone have a great weekend. And again, if you're not watching this on my website, head on over to my website, check out the posts there, and the other things I've got for you, and check out the Trade Ideas webpage, etc. And so until next time, stay focused, follow your plan, and trade without fear. Everyone have a great weekend.